That's another point of contention which we need to discuss. Good morning, good afternoon, and good evening, everyone, and welcome to our latest edition of PEP Talks, powered by AML Watcher. We are joined today by Zarik and Mida. I hope I pronounced your name correctly.
That's fine, Madira.
Madira, from AML Watcher. Madira, your role in AML Watcher?
Head of Research and Content.
Research and content, wonderful. And Zarik?
I'm for product marketing.
Fantastic. Thank you both so much for joining us today. It'd be really great to hear a little bit about AML Watcher. My understanding is that AML Watcher was a company that was created not through intention, but from frustration. So maybe, Zarik, you could talk a little bit to what those frustrations were.
Yes, I would say that our story is the most unique way of bringing a product to the market. So we used to be one of the clients of different RegTech solutions. So once we, started testing them out and started implementing them into live production environments, we started seeing nuances that weren't, evident to us once we were, in the market to buy them. So there we found a motto that there needs to be a fight for data accuracy. Everything in RegTech is as strong as the weakest link in the data chain. So that's the problem that we identified once we were using those systems as a client. Yeah. And we hunted the market very aggressively to find one solution that has the strongest data layer in the market out there. And we tested out everything and we weren't able to find it. So that's how our journey started to enter the RegTech market and create something that really solves the pinpoint, that the industry problem, that empowers compliance teams, that also empowers compliance solutions, and that also empowers regulators and financial intelligence units alike. So the data change is the thing that we started with the fight, and 3 years down the line, I can very confidently say that we have been very successful in creating something that if the world business it, they can understand the true value delivery through a better data chain.
Yeah. I love what you said there, that that RegTech solutions are basically only as strong as their weakest link. And one of the key things that you've talked about there is data. You can create the most laborious, fantastic, futuristic tech platform, which looks great, smells great, but when you start to use it, and even if the functionality is wonderful, if the data that's going into those systems isn't accurate, it isn't timely, the entire system will fail. So do you want to talk a little bit too about those data challenges that you were seeing? These are great, well-built fintech, regtech solutions, but why fundamentally was the data failing in these solutions?
I think we would need to go by specific categories of data. So for instance, since it's a PEP talk, so let's start from politically exposed persons. There's no single unanimous definition of who constitutes as a politically exposed person across the world. Yeah. FATF has a guidance, there's Wolfsburg Group, then there are different jurisdictions that have their own understanding. Just to give a more in-depth view on this, for instance, if you are a mayor in Canada, you are to be considered as a domestic PEP in case of there's a risk-based approach. In case it is designated as a high-risk entity, then the mayor in Canada has to be counted as a PEP. But in US, no domestic PEP is to be counted as a PEP. Yes. So there's a problem of varying definitions of PEPs across jurisdictions. And what this creates is what we like to call is a regulatory arbitrage. Yeah. So this regulatory arbitrage, that there's different definitions of PEPs. If I'm a PEP in my country and I know that my banking sector is going to, apply a very intensive risk-based approach on me, yes, and there isn't much of a place for me to play around, I can just practice regulatory arbitrage in another country. Yeah. And I would know that if I am a head of an international organization, then in Canada, I am under high scrutiny. Yeah. But that's not the case in the US. That's not the case in the UK as well. So that there are different loopholes that exist through varying definitions. And the problem was that it is not the decision of the data layer of who counts as a PEP, who doesn't count as a PEP. And it's the decision of a compliance program to understand the entire profile of a person as it is, like objectively, and then take a subjective decision based on their own risk appetite and their own compliance program. And just as we were discussing yesterday, it's not even the compliance team that takes the final decision, it's the business decision at the end of the day. So the problem was that the data chain was taking those decisions. They wouldn't apply a consistent definition across the entire world of a politically exposed person. So what we did is that we simply unified all of the definitions across the board, and we applied that uniformly across each jurisdiction. So for instance, even if a mayor in the US isn't counted as a PEP, we still included and marked them as a PEP. And if a US bank integrates AML Watcher and they just don't want that entity to be marked as PEP, they can just use custom risk scoring and omit PEP level 4 or mayors from that category. So that way they don't have any false positives. But if in the case of foreign PEPs, if they do want to count foreign mayors as PEPs, so they would have that flexibility to make those decisions. So that's how our data layer empowers different banks to implement their own compliance programs, and we don't take the decisions for them. It's their compliance program, it's their risk appetite that needs to take the decisions. The data chain is just to empower, it's just to show the complete picture of every entity that they're screening.
I think it's fair to say that a number of PEP lists that we've seen in the market, and again, I've worked in the industry for 20 years, so I'm very familiar with working with the data, with working with various systems and providers in the market. When it's specifically to PEPs, many of the lists that we see are not just outdated, but as you rightly mentioned, they're inconsistent in respect of application. And this is because of the regulatory differences that we're seeing around the globe and the differences in interpretation of who constitutes a PEP. So I'm really glad that you mentioned that. But I think also as well, one of the biggest areas of frustration and challenges and unfortunately enforcement action, and we'll come to a few of those cases in a bit, is around RCAs, basically relatives and close associates. Love a good acronym. These are the most challenging and difficult areas. And we've seen in recent sanction regimes, the nexus that is created through RCAs and the resulting enforcement action that's been taken against banks because of their inability to identify it. You have looked at that in a lot of detail as part of formulating these PEP lists. So you haven't just said, oh, here's tier 1 PEPs, or here's tier 2 PEPs. You've really broken it down into tier 1, 2, 3, 4, and done a lot of focused research in respect of RCAs. So it'd be really great to get some ideas around that data as well, and where you're seeing the challenges, because from what in our discussions as well, sometimes the easy solution is, let's look to AI tools to help support us with this. But I think what you've found as well, that this really is a human mind EDD activity where you need human researchers, not tech in the background, to basically understand and identify these associations. So it would be really great for you to talk to that, where not only will you have the research teams in place looking for RCAs, but also looking at the use case of AI and how we've seen in some cases AI is not always the solution to the problem.
I would like to differentiate between two types of AI. The general one that the entire world is currently talking about is artificial intelligence, but what we use is what we like to call is augmented intelligence. So with augmentation is what we do is we combine artificial intelligence with human minds, and we try to scale our human operations at the pace of an artificial intelligence system. So if we conjoin both of the systems, that's how we achieve both precision, accuracy, and speed in our operations. So the thing you mentioned about the EDD and RCAs, I think RCAs is a very interesting problem, and I think there's limited regulatory guidance on the type of loopholes that can a compliance team can fall into it. I think there needs to be more regulatory clarity on this. Specifically, just as we mentioned earlier, that RCA screening is only as strong as the weakest data chain. And you might be able to find very elaborative structures and relationship structures of tier 1 PEPs and all of those famous public figures, but it's not the case for tier 2 and tier 3 and tier 4 PEPs. And in many such situations, RCAs of tier 4 PEPs or tier 3 PEPs are not even considered as PEPs due to different jurisdiction interference of AML regulations. So that's how you go too aggressive onto marking RCAs, and then you find out that there's too many false positives and they're not needed. So there's another challenge. You go too light on them, and then there's a major scandal that happens through RCAs, and you are only able to identify it once the regulator points it out. So what we have done is that we have a both reactive and proactive approach for RCA screening. So what's unique to AML Watcher is that we have analyzed like millions of records of international leaks, and through those international leaks we have identified various networks and network within networks, and we have categorized all of those as in our RCA's graph language chain. So that's how but that I would say is a reactive approach to RCAs. The moment a network gets exposed, it's the moment that is not going to be used anymore.
Yeah.
But still, for due diligence purposes, there might be a few networks that are still operational. So it's still very much of help once we have that data into our in our database.
Yeah.
For a more proactive approach, we used a system called augmented intelligence, in which our researchers, they just do a job of a compliance officer. They check out tier 1 PEPs whenever there's a significant change in elections, whenever there's a significant change of public offices.
Yeah.
So they sit on there and they categorize which entities are the most high risk, and whatever information they are able to find across the web, they are able to put that into our system, just manually feed them to our system. Then there's AI systems. They are proposing different structures through their own research, and then there are our researchers that are develop experience in compliance. They check out whether the data is accurate, whether the AI system is hallucinating or not. So after a mix of automated and manual checks, the data is then fed into the system. So there's a mix of both reactive and proactive approach, and while there's no such standard or benchmark to RCA and the coverage of RCAs, but still the approach that we use, since we started as a client of RegTech solution, so I can very confidently say that this is one of the most extensive and comprehensive coverage of RCAs in AML Watcher.
Yeah.
That is empowering compliance teams to be more confident in their decisions.
The point that you mentioned there about kind of variations in regulations and regulatory clarity, as an industry practitioner, one of my biggest challenges when I was in-house was the definition of what is a relative or a close associate. Close associate, it's quite broad. So we're really looking for business associates, and that was quite straightforward. But the relative aspect is where we really had challenges, because we weren't seeing mothers, fathers, brothers, sisters, children as the challenge. It rather was extended families. And that is something where, as an industry practitioner, I really struggled, because with naming conventions and also with countries that I'm not necessarily familiar with, the variations in family name, legacy, looking at this from a third party perspective, i.e., if I'm sitting in the UK, but I'm looking at a name in the UAE or in Singapore, if I'm not familiar with that market or indeed with naming conventions, it was very challenging for me. So could you talk a little bit to how AML Watcher has tackled this specific problem, which many compliance officers are facing around the globe?
Right, Madhya, would you like to handle it?
Okay, I think I would like to begin with the RCA thing first. In some cases, the law is very clear. Like they even, in the case of Canada, they even say, okay, the mother-in-law of your partner or your wife or your husband is also a PEP. Your mother-in-law is also a PEP.
Yes.
So in that case, like they are very clear. But again, the data availability is a challenge in case of RCA. Like it's so, as Zarek has mentioned, that we have to use the proactive approach and reactive approach in some of the cases.
Yeah.
So that's it. Again, the most pressing challenge in AML compliance and AML screening is the matching the naming conventions.
Yes.
Just say that like there are so many Muhammads out there in the world. There are so many Alexanders and there are so many Lees.
Yeah.
Like you don't know which particular Muhammad or which particular Alexander or which particular Lee is the one which is mentioned in the OFAC.
And no offense to Mohammed's, Lees, or Alexanders listening today.
Obviously. Actually, it's for their sake. And I would like to tell that this was one of the reasons like why I am working with this. Like, it was like my passion to work for this GovTech, like governance and tech solutions, like
Yes.
those that actually amalgamate like how we can use tech for better governance and for better law enforcement, etc., etc.
Yes.
So like it was my passion to analyze them, and through AML Watcher, like this was one of the opportunity, how we can actually improve the solution to better tailor to the not only to the need of the market,
Yes.
but also to the need of the end user. The challenge with this AML laws and KYC laws is that very often end users are going to suffer. And for the naming convention, if a system fails to particularly like match the name exactly, like with data through data enrichment or through various tools, it's the end user who's going to suffer. It's the unsuspecting user, like someone whose name is not in OFAC list, just because they may match with some sanctioned entity or some sanctioned individuals, they are going to be debanked or they are going to face the de-risking. So yes, this is the not only the challenge of compliance, but at AML Watcher we see it as a societal issue. Like we have to solve that, because when a person is de-risked, that means they are going to be face financial exclusion. If they are going to be de-risked and they're high net worth, that means the bank is going to suffer a financial loss. So for AML Watcher Windows, it's not like we are just only give them a tool that they have to just tick the check boxes. Okay, I have done PEP screening, I have done sanction screening, I have done adverse media screening. Like we are making sure that that AML compliance is not actually a burden, but it actually gives them a way to expand smoothly. Like it actually that tech is actually making them giving them some tool that they are not unnecessarily de-risking the customers who could have been a potential asset.
And it's important to mention you're an economist by trade. Your background is in economics, and I love what you're saying there as well. You have come to this problem statement as somebody who's looking at the implication on businesses when we don't get this right. You're looking at where we actually are preventing business from happening and impacting individuals' ability to carry out activities. And so I love this positioning as well, because this isn't just about the regulation and the risk. This is also about, we want businesses to be able to operate. We want financial institutions to be able to provide services, and we want to make sure that individuals can get access to those services because they have been categorized in the right way. And that's really what you've looked at in this problem statement. It isn't just about making sure we identify the individuals, but we correctly ascertain their relationship and their level of risk.
Yes, and let me point out, Ona, like this is something which is corroborated by the facts, like it's a ground reality. I would like to explain the case of Cyprus here. And I think this prevention of excessive de-risking and getting the sanctions right is actually in the favor of those who implement it. Let me give you an example. If West wants Eastern European countries to implement sanctions in their true essence, so they have to make sure that it is not actually leading to the excessive de-risking. This is because that business will eventually move to the Central Asian countries. Like we have seen that many Russians, like who are suspecting, who had no links to the Putin's regime, or who had no links to the you can say that who are not criminals in any capacity. They were also like opening accounts in Kazakhstan, Tajikistan, like in Central Asian countries, because the rules there were lax. What that meant, like people are moving towards other locations. So those countries are facing the loss of business, and this is something which is making Eastern European countries like second guess like whether they should comply with OPEC or EU sanctions or not. So this is a big challenge. So in that case, they need a technological solution that actually helps them comply with these sanctions in the true essence, so that they don't necessarily unnecessarily de-risk the wrong people, which are actually a potential for their business. And so we are, as Derek mentioned, that it was this was the reason that the tool was actually created out of like not just to intend for the making some bugs, but actually to solve those problems like which were industry was facing. And yes, as for the naming convention, you have mentioned, coming back to that question, like we use at AML Watcher different methodologies, like our name matching algorithms like Soundlex, etc. We have to make sure that we are actually matching the aliases as well, and using the right fuzzy matching logic. And in some cases, we are even implementing the biometric AML, like to match the person's face, etc. And with unique identifiers, like we do take the passport number, identity card number at the input to distinguish that, okay, this person is the not this person which is in the sanction list, and it's a commoner, and who has to be who has to be onboarded.
And I love that, and that is a big differentiator as well in the market. You have biometric data on the PEPs, so we can link this up. You mentioned there about de-risking, and I actually heard a statistic recently. There was a whole discussion about should assets that have been frozen as part of sanction regimes be allowed to be used for societal purposes to benefit society. And this actually came out of, in London, there's a number of properties in very, very wealthy areas that are currently, uninhabited because they're owned by Russian nationals who can no longer access them or even do any renovations to them because assets have been frozen in the UK. And what I heard back actually quite surprised me. 60% of frozen assets in the UK alone are not actually assets pertaining to individuals that are sanctioned, but it is overzealous risk application. So 60% of assets that have been frozen against individuals is because not these individuals being named in sanction lists, but because of banks' concern about exposure to risk because they are high net worth individuals who may, in some course of business, have an association potentially to a PEP in some capacity. So, this is something where we as an industry need to, and you said it absolutely, nail on the head. You said it very, very well. We need as an industry to be more practical in how we assess the risk based on facts. Based on the facts that are available to us, so that we're not de-risking clients unnecessarily and then forcing them into lesser regulated environments. And these individuals themselves don't pose a risk to the integrity of our financial system. It rather is because banks don't have access to the right data to make a determination that gives them comfort to proceed with the account. And that's where, in particular, the PEP Watcher tool, the PEP Watcher data is differentiating in the market because you have performed that in-depth analysis.
That's it.
One of the discussion points that I hear many compliance officers talking about in various discussion forums that I attend is, the age-old once a PEP, always a PEP, and that how, we talked about this earlier, that PEP lists in many instances are not just outdated, but they haven't analysed where a person has stepped out of a position, how much continued influence they would potentially have. And tier one PEPs, the likes of previous prime ministers, such as the likes of David Cameron, Tony Blair, they speak for themselves. They will continue to have associations with PEPs throughout their lifetimes. Where is the challenge, or indeed, how has your team tackled that challenge with PEP? With tagging PEPs and potentially downgrading the PEP at a future date based on a review?
Right. As I mentioned earlier, that it's not a data layer's decision to take when to remove someone off a PEP list. It's the compliance programs and the business decision to take. We just need to feed them the right information that this is the date that someone was delisted, that someone was removed from the office, or someone was, someone was removed from the office. So that's the amount of data that we provide in our records, but we never actually remove someone, off the database simply because they left the office. There's different timelines. I think we were discussing earlier. I think it's 5 years in Canada. I think it's 1 year in the UK. Yeah. So it's the decision of the compliance team to take. Our job is just to feed them the right data that this is the exact date that someone was removed from the office. Another perspective there is that you need to count them as a PEP till the time they have the level of immunity that they used to have once they were in office. So even after a PEP is removed from the office, they do have some level of immunity, like for a period of 2 years or for a period of 3 years, that they have the same privileges, they have the access to the same level of information, and they have the decision-making capabilities as well as an advisor to the previous government or something like that. So there's another perspective that a compliance team needs to count them as a PEP, even if someone was removed from the office, till the time they have that level of immunity. But from a data layer perspective, we would just denote that this is the date that someone was removed from the office. Now the decision up to you.
And I love what you said there. You're giving the data to the compliance officer to make an informed decision. The compliance officer is not now going to have to go and do their own research to understand the dates of when they were in the position. All of that data is being provided to the compliance officer contextually with other relevant information attached, such as available information that's available in the public domain, all in one location. So the compliance officer can quickly and from an informed perspective make a decision to present to management and the relevant governance committee to make an assessment on whether or not they are permitted to de-risk the individual, either at the point of onboarding or at a future date as permitted, as you mentioned, 12 months after in the UK, 18 months after Switzerland, and also Canada as well. So this is really important, because I think that's a struggle as an industry practitioner we've had, is we're taking information from data sources within our screening systems, but then we're having to perform more laborious standalone investigations, which eats into our time. And also as well, we're not necessarily best placed to perform those investigations, and nor indeed do we actually have the time and the capacity to do it as thoroughly as we would need it to be done in many instances. And I'm not saying that compliance officers don't do their job thoroughly. What I'm saying is we need access to multiple data sources, but you've already done that assessment. Your team had, your researchers have performed that, provided all the data. So it's just a matter of the compliance officer looking at their policy internally, their risk appetite, and then making an assessment to present to the relevant governance committee.
Yes, I would like to add, Una, here that the most crucial pillar in this case is that the internal compliance program, like the financial institution must be clear, and their board of directors and their compliance teams or whoever their compliance head is, like it should come from them. Okay, this is our risk appetite, and this is how we are going to treat certain individuals as high risk or as low risk. The job of a screening tool is that they should provide them adequate and comprehensive data so that it can be flexible enough, or it can be customized to meet the needs of their particular compliance program. So compliance program has to be decided by the bank's board of directors or the relevant department, which is in case usually the AML compliance department. So for AML screening tool, they have to provide them just the accurate and comprehensive data. That's it. It is flexible and customizable to meet their needs.
Another thing I would like to add here is that we have been talking about PEPs, and we have been citing examples from the UK, Canada, and the US, and I think it gives the rise to another problem, that we don't talk often about countries that are not that much in the headlines. So for instance, if there's a country that is like war torn or going through a non-democratic patch, and if there are countries that have populations that are not like a country with less than like 100,000 population, so those countries often get overlooked by different PEP data layers, and the same level of scrutiny, the same level of research is not applied on them. And from those countries is you actually see that they are marked as the most high risk country, and they are marked as there's scandals, then there's international leaks, and then there's their network is exposed. So there's another thing that we did, is that we applied a consistent definition of PEPs and all of those other listing and delisting protocols across the entire countries and territories, state, irrespective of their population, irrespective of their democratic or non-democratic status. So that's another value added, because we saw that the major cause of false negatives is due to lack of data from these territories. So for instance, just recently I was looking at Google Maps, and I found a territory named Abkhazia. So just straight out of my mind, and I went out to our database and I checked how many PEPs do we have from Abkhazia. So it was a very interesting figure there. But I question myself, is that do all data layers consider Abkhazia as the same kind of important country as we are considering it,
Yes.
and or if there's just no we implement a lot of protocols on very famous countries, but same level of scrutiny is not trickle down onto smaller territories and smaller states.
Absolutely. And this is the challenge that many compliance officers have around the globe, is we're not always familiar with other territories, and that immediately gives us a lower risk threshold in order to do our willingness to work with those individuals sometimes is challenging because we don't know the environment. But one of the very interesting observations that I made the other day was when looking at the tool, when looking at the data, one of the countries, for example, Uganda, it was incredibly detailed because you've spent time looking at problem statements where clients have said, this is great. You have all providers of data on these markets, but what about these countries? These are our challenge or problem statements because we're not familiar with the territory. So you've actually spent time going into the weeds in various countries to really ascertain and understand the environment, the regulatory environment, the PEP environment, the sanction environment, and making sure that the data that you have is not just fit for purpose, but is usable by the compliance officers as well in their information and decision making. So I think it's fair to say that enforcement action is on the increase across the board, in particular with regards to not just PEP identification and management of those relationships, but also in respect of relatives and close associates. And in the UK alone, we have seen various banks, Commerce Bank, Standard Chartered, and smaller institutions as well, such as Sonali Bank, being fined as a result of not having in place adequate governance, de-risking or risk controls, poor monitoring, and failure just to identify RCAs, relatives and close associates. We're seeing also increasing enforcement action, as we were talking about earlier, in respect of other different types of regulated entities, so law firms. Would you like to talk in a little bit more detail about what we're seeing and what the challenges these firms are going to have going forward in respect of KYC and monitoring?
I think, yes, compliance and AML compliance is the biggest challenge for the financial institutes like big banks. Like they have to comply, like it's like from decades or like since this AML KYC laws came into being, like they were the first one that they had to respond. But over the years, and particularly in last 2-3 years, I think we have observed that some sectors like designated non-financial business professionals, they are also facing scrutiny, and as we have seen in the case of Australia, we have this is the tranche 2 which has introduced the AML laws for casinos, iGaming companies, and obviously then accountancy, legal firms. In Europe, we have seen, particularly in France, there is a higher scrutiny for luxury goods items sectors as well. So these are also facing a higher scrutiny. Particularly in case of UK, we have seen that after the Ukraine and Russia war, some law firms have faced higher scrutiny and even in some cases fines for the violations of sanctions regulations because they failed to take adequate due diligence measures.
So one of my favorite discussion points is the 6th Anti-Money Laundering Directive, the European 6th Anti-Money Laundering Directive, and whether or not following its implementation back in 2021, whether we are seeing the results from the directive that we had hoped or anticipated. I have my own viewpoints on it, but just kind of starting at a high level, the purpose of the directive was to harmonize the understanding definition of money laundering, which it has done very, very well. It's a definition, so we shouldn't get too excited about that point. But what it also did is it expanded the predicate offenses to 22 offenses, and that's something that we really need to talk about in respect of data sources and typologies. Obviously, it expanded the criminal liability to legal persons, now obviously corporate entities. And very importantly, it spoke specifically, in addition to some other areas, about harmonization and cooperation across judicial bodies within the European Union. that's another point of contention which we need to discuss. But if we could start first with, and I want us to go into kind of look at transaction monitoring and data as well in that, and also in screening, but starting with typologies. The 6th Anti-Money Laundering Directive expanded predicate offences to 22 offences. That's great, that's wonderful. However, my biggest issue was that this is a black hole for us as an industry, because we don't fully understand how many of these typologies or predicate offences work in respect of products, services, and financial flows. And I think that's a fair statement that we're seeing within the market. So if we could just kind of talk to that in terms of the expansion. We spoke earlier about kind of some recent enforcement actions, especially around corruption. These enforcement actions are increasing in respect of not just the frequency of enforcement, but in terms of the costs and the fines. And that for me is a big message of, are we identifying it in a better way, or because they're now captured, we can go through enforcement action, but where does that leave financial institutions that are failing to identify it? You could argue to an extent through no fault of their own. So I'd love to talk about some cases and also then to discuss in more detail going into kind of transaction monitoring and data sharing.
Okay, Una, to begin with, here at AML Watcher, there is one thing we talk a lot about, and it is the effective AML compliance. I think Sir could agree that even in compliance community, there are so many voices we hear like from the US as well, particularly. I don't remember the particular names right now, but they do talk about, there is a lot of talk about AML, this law, that law. Even let's leave EU aside for the second. Like even FinCEN comes up with this rulemaking and that rulemaking. We are going to this is the proposed rulemaking for the new AML CFT laws in this sector, in real estate sector, in investment advisory sector. And whenever there is some press release about, we have submitted our response to this particular news rulemaking, the first thing they say is that, is it going to be effective? Mm-hmm. Like this is the question that's going to come from the compliance community. And yes, when we talk about the effectiveness, it's going to depend a lot upon how we actually treat the how we're going to analyze that risk. That's fine. Like corruption, human trafficking, bribery, murder, cybercrime. These are all the predicate offenses. But there is we have to keep one thing in mind. Financial institutions rightly raise this point that the primary function of them is to do the business and not to do the compliance. They are not the law enforcement that they have to chase the criminals. Mm-hmm. So when we make these laws, we have to make sure that we are also providing them with the instruments, and we are also providing them with the you can say the resources to implement these laws as well. Absolutely. And for that, we have to clarify that what are those means, through which they are going to implement those laws, and through which they are going to identify, this particular transaction is linked to the some coming from some human trafficking agent, or this one is coming from the some sniper, or this one is coming from the politician who has been accused of corruption, or etc. etc. At AML Watcher, the best we could have done was that to give a 360-degree view of the risk. Once we are done with sanction screening, PEP screening, watch lists, and regulatory enforcement screening, we do the adverse media screening and the ongoing monitoring of this adverse media screening. And let me talk about it just to facilitate reporting officers and compliance officers with the better detection of those transactions, that whether they are related to some entity which is at high risk, or whether they are related to some entity which is actually could have been accused of or could have been involved in something. We offer them to a customizable tool. You know that this is the news outlet, this is the media which is going to post news of certain crimes. Add that particular resource in tool, and you can monitor it. This is the level of customization we are offering to the our clients, in financial sector, and whether they are in DNF BP or even in whatever capacity they have to monitor whether their clients are associated with such risks or not. So again, as you have mentioned, that what data sharing approaches and what transaction monitoring approaches can be used to detect such risks. This is I think the biggest pain point of the community, client compliance community. Like even some journalists have mentioned this. Okay, you talk about the risk-based approach, but like how that is going to be implemented when there is a lack of regulatory clarity and there is a lack of availability of tools. We are talking about the 6th AMLD. I think the biggest reason behind the fact that 6th AMLD failed to implement in its essence was that some European countries could not transpose it according to the laws of their own jurisdiction. And eventually we are seeing now the single AML rulebook, anti-money laundering authority, and which all came as part of a new AML package. I think it was adopted by Parliament in last May 2024. And
I like you looked at Sarat, like he knows.
no, actually, we're talking a lot about it.
I know, I'm just joking.
Talking a lot about it, like when we are devising. Okay, we are just going through our data for the whether like how we can improve it. As we have mentioned earlier, we have to keep an eye on the laws and how like these regulatory changes are evolving. And even one day we were just discussing that okay, there is political shift in United States, and we are the one who have to how we can present our product in a more better way, because you have seen that Republicans are back in power, and maybe they could have a different attitude towards sanctions implementation in Russia, and or maybe they could even increase the pace of sanctions implementation in for certain activities like fentanyl trading, routing from the Mexico or South American countries. So even in that cases, we will financial institutions working in the US will be needing tools for the adverse media monitoring it, so that they can detect whether a particular transaction or a person is actually high risk because of associated with that activity. So coming back to again that how data sharing and transaction monitoring can help with that, it's first thing is that clarity, which has to be provided by the law enforcement or regulators. Once the regulator provides the clarity, then we have to look, okay, this is the tool which actually helps. And it can be embedding adverse media through, and there are multiple. It's not only the adverse media. There are I think multiple data points which can help in it. It can be about the origin of transaction, the amount of the transaction, like whether it is structured or not, or whether the previous risk history of that person, or even the KYB checks. Okay. This person particular transaction has been sent to this particular address or this particular entity, whether that is actually exists or not, when it was formatted, when it was incorporated, its date, etc. So there are I think multiple data points which can be analyzed to check this is a high risk transaction or not.
I would just like to add one thing here. There's this Dr. Ron Paul from New Zealand. I don't know if you know him or not. He wrote an article in I think 2022, and he said one thing is that the market for AML is $1 billion industry, and the market for effective AML does not yet exist.
That's true.
So that's the point Madhya is trying to make, that the laws exist, the regulatory guidance it somewhat exists, the compliance program exists. But the means to implement those laws effectively without putting a dent to the business operations is that kind of balance that we need.